On this video, Saturday 16th of February 2013. Hope you had a good week's trading. Well, today's actually on this weekend. I'm going to try and put out two videos. I had some great couple of questions by email on Thursday and Friday, and I want to respond to those this weekend. The first one of those is going to be about the RAMBO patterns and amateur activity, so if you want to hold on, I'll talk about that kind of shortly. But just to go through some other markets. If you've been following over the last several weeks and months, gold and silver have been talking about these, and then Friday, all of a sudden, what I was saying was, we've been in this kind of fairly tight channel for the last couple of months, and we've been waiting for a breakout. The breakout really happened in big time on Friday, and we broke down through 1660. Here's the daily chart of gold, and we're through that support level into a trend move on the way down. You can see the strength of the selling kind of going on. So all of a sudden, and we get these kind of strong moves because everybody during this kind of congestion zone has been taking positions, and as soon as we kind of break out, you get all kinds of stops being run. People need to take positions, take action because they're wrongly positioned, or they want to jump onto moves and so on. So all of a sudden, it gets very active, and that was a really big day on Friday. But it was well telegraphed. We've had our exhaustion buying, bearish divergence, pullback to dirty end of trend, flushing out the buyers, exhaustion buying, blue professional bar, last roll of the dice here, and bang, now we're through a support. And on the weekly chart, been talking about this, on the bigger picture, we had our exhaustion buying, we had our blue professional bars active at the highs, bearish divergence, and we're through support here. So I feel sorry for all of the amateurs that have been suckered in by the gold bugs over the last couple of months. I keep on saying, everybody, we all know the gold bug story, and I kind of agree with it, kind of long term. But short term, the chart has shown us that we're going to break into a downtrend, and silver's no different. So silver pulled back to dirty end of trend, all these blue professional bars, exhaustion buying, bearish divergence, and then blue professional up bar gets broken to the downside, and then amateur up bar just into 32, and we roll over down through the blue professional bar, and we're now through support, and you can see the strength of the selling on the weekly chart here. Again, we're coming up to this 29 support level here, and we've had our exhaustion, end of trend, flush, bang. So look out, this is starting to accelerate, and Friday's activity was really kind of key. And again, long weekend, people have got some time to think about their positions, and all of a sudden they've been suckered into silver and gold. Sorry about that. And so currencies, we've had the pound's been extremely weak. We've had the euro kind of rolling over the last week and a half. Aussie dollar and loonie have been relatively strong, in kind of a global context, but they really started to weaken on Friday. The difference between the two, Canadian dollar, but they're both kind of resource-based economies, but the Canadian dollar and the Canadian economy is more attached to the US, and the Aussie dollar is more attached to the Australian economy is more attached to the Asian economy. So we've had a stronger Asian story than we have in the US, and that's why the Aussie dollar has been stronger than the Canadian. Just on the daily charts here, you can look over the last several months. This is the Canadian dollar, so it's been in a just general downtrend. If you look at the Aussie dollar's been in a general uptrend over that sequence. But what's happened over the last several months, and these things do take time to roll over, we've had exhaustion buying, bearish divergence, and a real spike in the Canadian dollar at 103, pull back to end of trend, and then coming back into this 102 level, RAMBO patterns, blue professional bars, and this is where they really wanted to get out. So big blue professional down bar here. You can see the strength of the selling getting this move going. They follow it up a couple of days later, kind of run out of puff initially, but then over the last couple of days, Wednesday, Thursday this week, amateur up bars testing up into a parity here, and Friday bang down. The parity level is really important on the Canadian dollar. We kind of just went through it and bounced last time. This time, weaker bounce here, and we're sitting at these kind of new lows type here for Canadian dollar, so that's looking weak now. And the Aussie dollar kind of followed it down. They kind of tend to move a little bit in sync. Aussie dollar on the bigger picture here, this thing's taken forever. I mean, it's been so strong for the last 2 years, up at 102 to 105 kind of levels, but we did put in pullback to end of trend on the weekly chart, bearish divergence kind of coming. That's the initial kind of rush for the Aussie dollar here. Ran out of puff, came back up, but RAMBO patterns on week amateur up bars, RAMBO patterns on the weekly charts here. Go down to the daily chart, we put in our pullback to end of trend. It's been incredible. We've had our exhaustion buying and bearish divergence over here on back in, what is that, August or something, but kind of come back up again. Blue professional up bars at 105, and they're getting out here, two of them up and then the lows get taken out, bang. Initially into a Rambo pattern here, and we kind of bounced off there, but we're in a downtrend. We've broken below support on the daily chart, and support becomes resistance, bounce off that level, and down we go on Friday's activity. So look out for that. The parity level again against the US dollar for the Aussie dollar is kind of absolutely key, so look out for that level. But I'd suggest we're now in a downtrend on the daily chart, and we got weakness on the weekly chart. So those are starting to get interesting. So of all those currencies, the pound has been the weakest. The euro kind of kept going into a little bit of a blow-off move, but now the kind of resource currency kind of are rolling over as well. So and the yen. I mean, the yen's just been flabbergasting just how weak that's been. The capital outflow happening in Japan. Don't know, yen kind of going forward. I'm looking for some kind of short covering rally, explosive short covering rally, because all the hedge funds are massively short yen with a trend move like that. And the yen and the US dollar, kind of carry trade type currencies. So, if there's some kind of repatriation required that could be strengthened the yen, who knows? But anyway, so Aussie and the loonie were kind of interesting this week, and then kind of confirmation with gold and silver, the activity that's kind of been going on. Quickly, just talk about the E-mini, what's been going on the weekly charts here, and here we go. This is this week's activity. I'll show you on the weekly chart here on this pattern chart. That's it. It's unbelievable. The range, top to bottom, for this week was about 11 points, I think. It's unbelievable. So we came into the last couple of weeks, we had a stopping volume, which means kind of compressed range and higher volume, showing profit taking happening. No demand just shows that there's no demand. These highs, no one wants to buy very much. Here's another kind of sequence of no demand and stopping volume kind of going on, rolling over. So at some point we'll get this roll, this kind of left shoulder, but I'm looking for it, but it's we haven't had it quite yet. And then if you look at better volume patterns, so last week's activity was exhaustion and high volume churn. I often get emails saying, how can you get those two? It's kind of mathematically impossible. Well, it's not. There it is. So it just shows a relatively high kind of exhaustion pattern plus quite a lot of churn going on here, and then this week's activity was pure churn, so that's relatively high volume with relatively low range, show that there's lots of profit taking kind of going on. So you can see churn type bars here. You can often get them into as breakout levels here, and that's kind of absorbing. So there's sellers definitely happening at this type of breakout level here at a high volume churn bar. So sellers are coming in, but they get overtaken by the buyers, and eventually we kind of break out. So the question is, at this point here, are we ready to kind of keep going or roll over? So I suppose just because I see all these other markets rolling over in all the other charts, that dollar index is strong and all the risk on currencies are weak, and then the bond market's trying to make a low and kind of go to the other side of the channel on bonds. Because of all those markets, that's why I think at some point we'll put in a left shoulder on the E-mini, but again, it's not happened yet. And just in terms of better X trend, we're in an uptrend. We're following this trailing stop up, but it's getting tighter and tighter up here. So on the weekly chart, that's what better X trend's showing us. Daily chart of day session only, same thing, which kind of trailed up pretty high here. S&P 500, you'd expect similar pattern there. NASDAQ, same deal. This is day and night session of the E-mini again, trailed stop up pretty tight here. Dow, again, same thing, pretty tight. There we go. So better X trend's kind of showing us still in an uptrend, but it's getting tighter and tighter up there. And then if we look at the 40,500 tip bar chart, for this next sequence, this next kind of trend move, what I'm looking for is a break of the support, mostly on the 40,500 tip bar chart. Maybe it will go through the resistance into another trend on the way up, but so far over the last couple of weeks, these support levels have all held. We've not broken into downtrends on this higher time frame. It's getting weak, and Friday's activity was interesting. Half the day on this 40,500 tip bar chart was high. Average trade sides, lots of professional activity going on there. If you zero in on the 13,500 tip bar chart, you can see kind of what was going on. So we had, coming into Thursday, blue professional bars at the highs. We had our exhaustion buying on Friday, blue professional up bars, and that was falling through the ice. Blue professional bar through support, kind of getting this move going, but kind of ran out of steam at 15.12, came back. We've come back into this sell zone. I mean, blue professional bars at the end of the day and the end of the week, obviously they're just kind of getting out positions rather than positioning themselves going forward. But it was interesting. It was back into that kind of sell zone. So let's kind of wait and see what happens Monday. So let's talk about Rambo patterns, because I had a great question from Mike. So here's Mike's question on Friday. Is the R associated with a Rambo signal indicative of the direction the amateurs are going or the trend? For example, today, which is Friday, on the 1500 tip bar chart, at 9:51 Eastern, so 8:51 Chicago time, there was a red R below the up amateur bar. Products are fantastic. Truly appreciate the videos. Thanks, Mike. Okay. So let's talk about Rambo patterns, and there's 3 points here on Mike's email. First of all, the coloring of the Rambo patterns, whether the bar was up or down, and what the Rambo pattern is showing us. Is it kind of in terms of direction and trend? So let me just talk about how I interpret Rambo patterns, and this is the Rambo pattern that Mike is referring to on the 1500 tip bar chart here. So first of all, on my charts, what I do is I color all Rambo patterns, whether at highs or lows. I color them yellow. So you can see a couple down here, one here, one here. All of these are yellow. The reason why I put them yellow is because with Better Pro-Am, I color amateur bars as yellow, professional bars as blue. And Rambo patterns are really to do with amateur activity at extremes. And so what I want to do is I want to kind of confirm amateur bars with Rambo patterns, and so I paint the Rambo patterns yellow. The default coloring in the indicators when you kind of download them is that the Rambo patterns are colored with support and resistance. So because this one happened near a support level, kind of a local low down here, it's painted R, and this one would have been probably painted white because it was kind of a local high. But for me, I just find it easier to have it as yellow and to line up with the Better Pro-Am amateur bars. So that's the reason for the coloring, that you were seeing kind of a red coloring, and I've got a yellow coloring. Now let's look at this. You can see we zero in a little bit. You can see the close of that amateur bar Rambo pattern is at the highs here. But what's actually going on there? Does that mean that the amateurs were buying because that bar kind of ended up at the highs? I interpret it differently. So this is what I see kind of going on. So first of all, the day starts on Friday. We had a lot of blue professional bars on the 1500, 500 and the 45. A lot of blue professional bars kind of getting positioned at the end of the day. Normally you'd see one on the open, maybe one after on 1500, but we had bars before and after. A lot of blue professional bars kind of going on here. Make a little bit of maybe a double top kind of going on here, and we break to new lows on the day. I mean, at this point here, we're 25 minutes into trade, so it's not gone very far very fast, but we're breaking to new lows at this point here. Now, the way I think of amateur activity, and to some extent you have to kind of simplify what's going on to the big actors, the professionals and the amateurs. The amateurs love, first of all, they love trend moves, and they anticipate every breakout is going to be into a trend move. So they love buying and selling breakouts, anticipating trend moves. They also tend to be at extremes. They're not kind of getting positioned during congestion phases. They're kind of taking positions at those extremes, looking for those breakouts, and they're also trading with small stops. So first of all, we've broken to new lows. You can see here the market started to roll over a little bit. Maybe their moving averages have rolled over, their MACDs have shown divergence, whatever it might be. But at this point, we've broken to new lows. We've got a little bit of a doji pattern in here, and there's amateur activity at these lows. Now, what I see going on is the amateurs expecting a breakdown into a downtrend at this point and getting short. Now, the strength of the market is still there because we got pullback to end of trends kind of in there. There's quite a lot of selling going on, but there's amateurs getting short at that point because they're expecting a breakout into a trend move, and it's at new lows. Even though the bar closes on the highs, for me, and that's not important. Where the close is doesn't make a difference. It's where that bar sits in the sequence that we've had. Okay, that's important. So that for me shows amateurs getting short because it's a breakout to new lows, and they love jumping on board a breakout move. Okay, now what happens is the market reverses and goes the other way, And remember, they put their stops maybe 1.5, 2 points away. So we get, they're kind of short at 19, let's say we'll get to 20, 20.5, and all of a sudden they're under pressure. We've broken to new highs. They've maybe put their stops up here, just sitting above these kind of privet highs here, and all of a sudden we break to these new highs. So a couple of things going on. First of all, their stops are getting run. So all of a sudden you see that amateur activity on the other end of a congestion zone, and that's what you'll often see. Rambo patterns, top and bottom of the congestion zone. They're getting short here. Their stops are getting hit as they place them above previous highs, just within a quarter point or a half point, because they're unwilling to take any risk and only a point or two away from where they entered. So their stops are getting hit here, plus we're breaking to new highs, so there are other amateurs saying, well, this is going to break, I'm going to reverse my position, or I'm going to get into a position anticipating a breakout of a trend move in the other direction, kind of going the other way. So that's what I see kind of going on. So first of all, the close, so to answer Mike's point, in terms of, it was an up bar. That doesn't matter to me. It's where that bar sits in terms of the sequence where it was in that channel that's important, and that tells me what they're doing. And then, is it indicative of the direction the amateurs are going or the trend? Well, I suppose, yes, it is indicative of the direction, because the amateurs are going short here and they're going long here. Now, a lot of people say, oh, that's so cruel, the poor old amateurs, they're not that dumb, are they, blah, blah, blah. You need to make assumptions about kind of the big players. Wyckoff talks about the composite player being the smartest man in the room. It's like everybody's different. Not everybody's kind of making money every day and so on. And all this is showing you is this is low average trade size, so it's likely to be amateur activity. And if it's happening at kind of local extremes, they're breaking out, they're trading breakouts. So it's the assumption that I make, and it's workable. It does work. So and you can see, the professionals got positioned at the beginning of the day. These were all these amateur bars kind of here, kind of getting positioned, and then it's not until we get a break of the support level at this point here on the 1500 tip bar chart that shows us there's weakness in the market. So we couldn't break through a resistance to show strength in the market. We didn't overshoot the end of trend. We overshot the support, which shows we're in a potential downtrend. As soon as this bar kind of comes in, this resistance level kind of comes in, and we can't get through that resistance. So we've had a break of support showing weakness. We can't get through resistance that shows there's a lack of strength. Then the blue professional bars kind of come in, and they're coming up to this previous low here of this kind of channel around here, and they're saying, oops, I'm getting short. So they're shorting at this point. We break through the lows of that blue professional bar. They keep going. All of a sudden, we're through this kind of channel here that we've had, and we're into a downtrend. This exhaustion selling shows the strength of that selling coming into there. Here's little amateur bars that are trailing their stops maybe, and the amateurs kind of getting out here. We have exhaustion patterns. We have a little bit of strong kind of rally back. This is kind of a short covering rally kind of here, but they're the professionals coming back in. This previous kind of sell zone where they were selling it down at 19, bang, come back into that sell zone. Resistance kind of comes in on this chart, and bang, we're down again. And then the next time you see Rambo patterns are down here. It's after lunchtime, and the amateurs are down here now. Are they expecting the market to kind of keep on going after we've had this exhaustion and bullish divergence kind of come in? Yep, maybe. So, it's not, I don't think necessarily their stops are getting run down here, because that's quite a long way from where they might have been positioned kind of previously. But they're seeing all of a sudden, well, this thing's just going to go down and down. We're going to close on the lows for the end of the day. Unfortunately, they get wrong-footed. The market kind of reverses because we've got all this bullish divergence kind of comes in, bang, and reverses back up, 5 or 6 points the other way. So, Mike, hopefully that was helpful to show you what's going on with Rambo patterns and how I interpret them. So look for them in channels, and unfortunately they're showing you what the amateurs are doing, and they're looking for breakouts, and that's why they kind of signal where they do. So there we go. I think that's enough kind of video for today. So I was actually short 20 even on this trade, kind of going down here, and caught a nice 4 1/4 kind of going down, but this video probably is going to run long, so I'm not going to tag that on. If you're interested, I will do it later, but let me know. Anyway, hope your trading went well, and we've got a long weekend kind of coming up. I'm going to do another video on a question I got on another kind of matter later on, so enjoy your weekend.